Hi guys, welcome back. In today's video, I'll be showing you how to get started investing in crypto as a complete beginner and give my thoughts on the crypto basics, what I think is a good starting crypto portfolio, and also my top crypto tips based on my many years of experience in the cryptocurrency space. And as the title suggests, this is primarily aimed at beginners. However, there'll be nuggets of information I feel in this video which will appeal to everyone, maybe even OGs of the crypto market. And as always, the information in this video is meant for education and entertainment purposes only and should not be taken as financial advice. Okay, now let's begin. Crypto basics. Crypto is a decentralized digital currency that enables users to send money over the internet using blockchain technology. And the most well-known cryptocurrency in the space is Bitcoin, which was launched back in 2008. Blockchain technology can be best described as a digital ledger that is shared across a computer network, otherwise known as nodes. And in the case of how Bitcoin works, a new transaction is entered and the transaction is submitted to the network of peer-to-peer computers, who then solve equations to approve the validity of the transaction. And once it is confirmed to be a legitimate transaction, it is clustered together into what are called blocks. And these blocks are chained together. This is where the word blockchain comes from. And then once transaction is completed, it is permanent. What makes crypto so unique compared to traditional banking is that a user can transfer value online near instantly and with low fees, therefore cutting out the middleman. And the top 3 popular cryptocurrencies by market cap currently are Bitcoin, Ethereum, and XRP. So for this reason, why I think crypto is appealing to so many people is because cryptos allows users and individuals to have complete control over their cryptocurrencies or digital assets, and they are not controlled by any banks or centralized authorities. How to invest in crypto. Investing in crypto is very high risk, and as a beginner I would personally advise to only start with the less risky plays like Bitcoin and maybe Ethereum, because this will help you determine at an early stage your risk tolerance level. As from someone who has experience having been in the crypto space for many years, until you've actually seen your investment drop by 30% or more in a single day, you won't know if you can stomach it, as investing in a smaller cap crypto projects can drop even further more than over 70% in a very short space of time. That said, even though the risk can be high, the rewards can also be high with the smaller market cap projects if you spend the required time to understand the market fully and you are able to determine which projects are best to invest. And a good research tool to start with, I think, is CoinMarketCap. CoinMarketCap is basically a website that provides useful data and information about the top 100 to even 500 cryptocurrencies by market cap, with Bitcoin currently sitting at number 1 in the list. And why I think this platform can be useful not just for a beginner but also for more established crypto investors is you can search for projects within a specific niche or market cap range. And as an example to show you how this works, let's look at the AI sector, which I'm very bullish on in this bull run. If we click on the AI tab, it will sort all of the AI crypto projects by highest market cap first. And market cap, just to explain, can help a beginner to determine the risk level they want to take, as the higher the market cap indicates less risk as the project is more established within this crypto space. By clicking on a particular project, in this example, let's take a look at BitTensor, which we can see in depth more information about this crypto coin. Now we're on the BitTensor page, I want to highlight some key points to consider before investing in this project, or any project in fact. Firstly, we can see that the market cap of this project is 3.9 billion, but it has a fully diluted market cap of 9.4 billion. So what does market cap versus diluted market cap actually mean? It means the project currently has a market cap of 4 billion, however not all of the BitTensor tokens are in circulating supply or available. So once all of the tokens are in circulating supply, the market cap would increase, putting BitTensor at its 9.4 billion market cap. So why this is an important metric to understand is if, say, all the remaining BitTensor tokens came into circulating supply tomorrow and you had invested in it today, the release of the new tokens into circulation can dilute the value overall, and this can affect your potential profit on this project because of the increase of tokens now available. I must be clear though that I'm not saying all tokens for BitTensor are being released to market tomorrow, and there are tools to see when tokens are due to be released, but this is a beginner guide, so don't want to go into too much detail in this video, and just using it as an example to emphasize why it's important to evaluate both market cap and fully diluted market cap as an investor at any level. Personally, as a beginner though, I don't think you should be looking to invest large amounts of money in projects outside the top 10 or even top 20 at the very start. I would be focusing on Bitcoin and Ethereum and maybe Solana only as your main portfolio value. But it is worth knowing how the market cap and fully diluted market cap works as you become more advanced in the cryptocurrency market. The next section which is important to mention is the Markets tab. As we can see, what this tells you is which exchanges you can buy the token from, i.e. in this example, BitTensor, as we can see, is currently available to buy on the main centralized exchanges like Binance and Coinbase, which makes it easier as a beginner to buy the token. I have also provided a setup tutorial to signing up to Coinbase late in the video to help you get started. So for beginners, Coinbase is a good starting point for your investment journey. It is a well-known company and has most of the top cryptocurrencies like Bitcoin available in most countries. I personally have used Coinbase myself, so think it is the easiest exchange to get started with. Binance is also a good exchange though, but it's not available in the UK where I am currently based. Okay, so going back to the CoinMarketCap homepage, as a beginner, I would highly recommend starting your investment journey looking at the top 10, possibly into top 20 cryptocurrencies, and getting a better understanding of which you think might be the right investment choice, if any, for you. As you start to go further down the list on CoinMarketCap, the market cap gets smaller, which can potentially offer better rewards, but also come with much greater risks. And so as a beginner, I wouldn't recommend this, at least until you have a much better understanding of the crypto market cycles and how they work. Coinbase Exchange Setup Tutorial. Alright, to help you get started on your investment journey, I will guide you through the beginner-friendly Coinbase Exchange setup instructions. First, go to coinbase.com, select sign up, and it will take you to a create an account page. Fill in your email address and create a password. Next, fill in your full name. Select a mobile number to verify. You will then be asked to enter code sent to mobile for verification. And on the next page, it will request for you to answer some questions about you and verify your identity. A useful tip for UK-based investors: in the UK, it now asks you to answer some questions to test your knowledge on general crypto topics once you sign up to complete the process. And if you get it wrong, it locks you out of the account for a period of time before you can try again. So to help you with this, I found a useful guide which will help you answer these questions on Reddit. As we can see here, you just need to pause the video and make a note or screenshot of the Reddit URL and then come back to it later if needed. And once you have completed the sign up process and logged in, it will take you to the home page. And from here, in order to look for a specific cryptocurrency to invest in, at the top search bar, type in the acquired cryptocurrency. In this demonstration, I will search Ethereum. Click it from the list and it will take you to Ethereum overview page. And to buy Ethereum, you just need to go to the Buy Now tab on right hand side as highlighted in red. Then select the amount of dollars or pounds you would like to buy and click Review Order. It will then prompt you to confirm Happy to Buy. Note, when you are buying crypto for the first time on Coinbase, you will be prompted to add a bank account or card details to complete the purchase. Popular crypto terms. To get a better understanding of the cryptocurrency market, I think it's important to know the most commonly used terms and phrases which we'll come across, and I will go through some of the main ones for you now. First is altcoins. Altcoins are best described as crypto projects like Ethereum or Solana, and the only project you wouldn't associate with being an altcoin is Bitcoin. Next is bull market. A bull market is an investor term used to describe the crypto market prices going up and in an overall positive uptrend of the market. Bear market. A bear market is the opposite of a bull market, and the crypto market prices tend to go down and is an overall negative period of the market. However, it can also be the best time to accumulate good quality crypto projects ready for the bull market, as prices are much lower. Blockchain. Blockchain technology allows data to be stored in a decentralized way, and this is the main technology used for cryptocurrency projects like Bitcoin and Ethereum. Decentralized versus centralized. Decentralized is the term used to describe technologies that are not controlled by a centralized authority, like banks or governments. DeFi. DeFi is the abbreviated term used to describe decentralized finance, which are applications or services that leverage blockchain technology to provide decentralized financial services. DYOR is an abbreviated term for do your own research, often used by crypto influencers to warn investors to research a project themselves before considering investing. FOMO stands for fear of missing out and is an investor watching a crypto project explode in price, and they then rush to buy into the project through fear they will miss out on the possible gains. FUD stands for fear, uncertainty and doubt, which is usually when a project is talked about in a negative manner to influence a person's view in a negative way. HODL is the misspelt crypto word used to describe hold, meaning not to sell your cryptos. Market cap is the market capitalization of a crypto project, which is calculated by the price of the asset multiplied by circulating supply. It is often used to gain an understanding of how a popular crypto project is, as the higher the market cap indicates higher interest. Private key. A private key is what identifies the owner of a cryptocurrency wallet in a similar way to a password is used to access a bank account. Crypto wallet. A crypto wallet is a digital tool used to manage your cryptocurrencies like Bitcoin or Ethereum. It should be noted though, it doesn't store the coins themselves in the wallet, only the private keys that give access to them. And finally, DCA, or dollar cost averaging, is a strategy that involves investing a fixed amount over a set period of time. For example, I could buy Bitcoin every week automatically for 1 year, no matter what the price is. This strategy can be beneficial for beginners who don't have to try and time the market and work out the best time to invest. What is Bitcoin? Bitcoin is a digital currency designed to act as a form of money, and payments that are made on the network are outside the control of centralized authorities like banks. And the total maximum supply of Bitcoin is 21 million, so there will never be any more than this ever created or mined, because the 21 million Bitcoin limit was hard-coded into the blockchain by creator Satoshi Nakamoto. It is, however, estimated 4 million Bitcoin have been lost to date, but this number could be a lot higher due to people losing their private keys, which are needed to access digital wallets that store their Bitcoin. The Bitcoin white paper was published in October 2008, outlining the Bitcoin network's main use case, which was to create a trustless system for electronic transactions, and the name Bitcoin was chosen by taking the two words bit and coin to form the word Bitcoin. And Bitcoin works by using a proof of work consensus mechanism to complete transactions. Miners verify transactions by solving cryptographic puzzles, and for all completed blocks of transactions miners make, they are awarded with some Bitcoin. Satoshi Nakamoto, an unknown person or group of people, invented Bitcoin in 2008, and Bitcoin was officially released as an open source software in 2009. And there have been many rumors over the years about who Satoshi Nakamoto is. They include Halving. Halving was an American software developer who received the very first Bitcoin transfer in 2009 from Satoshi Nakamoto, with some people saying he could have been the one who transferred the Bitcoin to himself. Finney, however, denied he was Satoshi Nakamoto up until his death, sadly, in 2014 at the age of 58. Nick Szabo. Nick Szabo is a computer scientist and cryptographer who designed a decentralized currency he called BitGold in 1998, years before Bitcoin came into fruition. However, BitGold was never fully implemented and only made public in 2005. Szabo has always denied he was Satoshi Nakamoto. Bitcoin halving event. A Bitcoin halving event occurs every 4 years and reduces the rewards for mining new Bitcoin by half. And the aim of the event is to reduce the rate new coins are created, lowering the new supply available over time. What makes the event special is after each previous halving, Bitcoin has seen big price movements, which is one of the main reasons crypto investors pay close attention to it when this happens. The last Bitcoin halving event happened in April 2024, and this meant the current Bitcoin being mined per each block went from 6.25 Bitcoins to only 3.125 Bitcoins per block. And the next Bitcoin halving event is due in April 2028. The attached image shows the Bitcoin halving events from as far back as 2009 up until the last halving event, which was in 2024. As we can see that back in 2009, 50 Bitcoin could be mined per block, and how over time with each halving event the Bitcoin being mined has been cut to only 3.125 Bitcoin being mined in 2024. Bitcoin versus altcoins. Bitcoin is the number one cryptocurrency with a market cap of just over 2 trillion at time of recording, and stands separate to all the other cryptocurrency projects in the space, like Ethereum and Solana, who fall under the category of altcoins. But what are altcoins? The word altcoin is actually derived by combining the words alternative and coin, and within altcoins sit several categories like stablecoins, meme coins, utility tokens, privacy coins, and more. Stablecoins, for example, allow investors to buy and sell cryptocurrency tokens within the exchange easily without having to convert back into fiat currency like dollars or pounds. And utility tokens' main use cases, like in the example of Ethereum, is to let users pay for transaction fees on the network using the utility token known as Ether. Like Bitcoin, altcoins use blockchain technology to function. However, what makes Bitcoin unique over altcoins comes down to 3 factors. First is longevity. Bitcoin has been around since 2009, so is well established. Second is value. As mentioned in the introduction, Bitcoin has a market cap of just over $2 trillion currently. And third is reduced volatility. Bitcoin has a much lower volatility compared to altcoins. Altcoins prices are more volatile and can move up and down by massive percentages, causing big potential profits but also big potential losses within a short space of time. So a much more higher risk than investing in Bitcoin. If we take a look at CoinMarketCap, we can see that currently within the top 10 is made up of Bitcoin at the top, 7 altcoins made up of Ethereum, XRP, BNB, Solana, Dogecoin, Cardano and Tron, and 2 stablecoins, Tether and USDC. Beginner's crypto portfolio. Okay, so as a beginner, I wouldn't recommend you invest in lower market cap altcoins, which can be described as crypto coins outside of the top 20 by market cap on CoinMarketCap. And this will provide extremely high risk and likelihood you will lose all your money. As a newbie to the market, you will not be experienced enough in the early stages to be able to get in and out of this type of lower market cap coins fast enough to make good money, unless you have the time to watch the markets on a daily basis, which most beginners won't. So for this reason, I believe a good starting portfolio for a beginner that will still give you some exposure to altcoins would be as follows. 50% Bitcoin. The reason I would have 50% in Bitcoin is because it limits the volatility greatly to your overall portfolio. As a beginner, you will not be experienced and felt the emotions of seeing an altcoin drop 90%, and most investors won't want to see that, so having your investment capital in Bitcoin will help you to mitigate this risk and help you sleep well at night. 30% Ethereum or Solana. Next, I've chosen 30% allocation in Ethereum or Solana, which are technically altcoins, but I would put them in the box of premium altcoins when compared to the rest of the altcoin market. And the reason I put 2 options here is depending on when you watch this video. Let me explain. If watching at the time of publishing, I would personally choose Ethereum over Solana, as I feel it has a higher return potential in the remaining bull market, but both I feel offer good long-term potential for this portfolio. 20% altcoins. Lastly, I've chosen 20% in altcoins, which to some will probably seem a high percentage and risky for beginners' crypto portfolio allocation. And yes, it does offer you risk, all cryptocurrency coins do. But if you were to put all your money in, say, Bitcoin, you should be aware that in reality you are unlikely to make any high gains from Bitcoin alone at this stage of the market, given its price currently sits at just over $100,000 per Bitcoin as of today. So when it comes to which altcoins to invest, I would recommend looking at altcoin allocations within the top 20, possibly going down as far as top 30 altcoins if you are prepared to take some more risk. Some example picks to look at to do your own research on are XRP, Sui and Dogecoin or Pepe, just for a bit of meme coin exposure. Finally, to conclude, I think a 50% Bitcoin, 30% Ethereum or Solana and 20% altcoins, higher market cap altcoins, would make up a good balanced starting portfolio. But please be aware with any investment it will come with big risks, so do your own research. Alternatively, if you want to be extra cautious and take less risk, then a 70% Bitcoin allocation and 20% Ethereum, 10% altcoin portfolio will be a good option for you, but the potential returns on this portfolio will be much lower. Top 5 crypto tips for beginners. Okay, to finish off the video, I'd like to give you my thoughts on the top 5 crypto tips every beginner should know and help guide you through your investment journey as safely as possible. Number 1, don't invest more than you can afford to lose. This might sound obvious, don't invest more than you can afford to lose, but trust me when I say you will get a period in the market where FOMO kicks in, where you will see prices going up and you will think it will continue going up forever. So you invest money you shouldn't at a time of euphoria, and before you know it, the market reverses sharply and you end up selling at a loss. The market moves fast in both directions, up and down, so just something to be aware of. Number 2, build a network of crypto influencers to follow, the right ones. While some influencers may be affiliated with particular projects, so biased towards a particular coin, which is something to look out for, there are still influencers in the space who do offer useful information. My advice would be to take on board different viewpoints on multiple platforms. The ones I personally use are YouTube and X, formerly Twitter, for news and updates. But ultimately, I wouldn't advise making any investment decisions based on any crypto influencer's advice. That includes my own. You should spend the time researching a project yourself to fully understand the risk before choosing to invest your own money. Number 3, stick to top 30 cryptocurrencies as a beginner. As mentioned in the crypto portfolio section of the video, most beginners should stick to mainly Bitcoin and Ethereum as their main portfolio investment when getting started. However, I know some people will want to take on a little bit more risk and try to make more money. So for those investors, look at projects which are within the top 30 by market cap on CoinMarketCap. This will give you that little bit more risk but not get you wrecked. Number 4, patience is key, but get familiar with how the crypto cycle works. As the famous saying goes, time in the market beats timing the market, meaning you should invest and wait for the right time, which could be longer than you think. This is why dollar cost averaging into Bitcoin can be very beneficial for beginners. Just set it up and forget it if looking to invest longer term, which I recommend doing. Also, patience plays a role, especially with crypto. However, I recommend you get a good understanding of the crypto market cycles and how they work, as you don't want to be buying an altcoin, for example, near the top of the bull market, only to see it drop considerably shortly after buying it. Most altcoins will go down over 90% in a bear market, so you don't want to be left holding it to the next cycle, because there's no guarantees it will ever go back up again. Finally, number 5, understand how blockchain and cryptocurrencies work. Having a good understanding of how blockchain and cryptocurrencies work is really important in helping you to select the best project with a long-term investment potential. And I would also put exchanges into the same bracket. Start investing with big exchanges that are reputable, like Coinbase or Binance, to minimize your risk. But like anything, no exchange offers 100% security, so whatever exchange you use will come with risk. So with all this said, all that's left for me to say is that cryptocurrency investing is very high risk, especially for beginners, and that's why it's so important to do your own research into given projects before investing. But hopefully this guide will help you get started on your crypto journey.